It's April 9th, 2025, and President Donald Trump has just pulled one of his trademark shock moves. Only a day after slapping a wave of new tariffs on dozens of countries, he suddenly hit the brakes, announcing a 90-day suspension of those country-specific reciprocal tariffs for most U.S. trading partners. This abrupt U-turn triggered a powerful rally on Wall Street, as investors who had been in a panic suddenly breathed a sigh of relief. But it also left many people around the world bewildered. Allies and competitors alike are asking, what is Trump up to now? Why does this 90-day tariff pause matter so much? Well, it matters because it highlights the high-stakes, boom-and-bust approach of Trump's trade policy, and it could reverberate across the global economy. In the span of a week, we've seen markets plunge, diplomatic tensions spike, and then a tentative calm, all because of U.S. tariff decisions. This 90-day pause is more than just a breather. It's a window into Trump's broader economic strategy, and a moment that could either ease a brewing trade war or simply delay it. In short, the world is watching closely, because what Trump does now will ripple worldwide, testing global economic stability and America's leadership in unpredictable ways. Let's start with what exactly happened on April 9th and why. Trump's announcement that day came via a new executive order, and it was striking. He declared a 90-day suspension of the additional import taxes that had been placed on specific countries just the day before. To put it simply, the White House pressed pause on its freshly minted tariffs barely 13 hours after they went into effect. Under this temporary deal, all U.S. trading partners, except China, would revert to a baseline tariff rate of 10% on their exports to the U.S. for the next 3 months. Those punitive country-by-country tariff hikes that Trump had announced in a dramatic flourish, they're on hold until early July. Why exclude China? Because Trump pointedly did not extend this mercy to Beijing. In fact, at the same moment he offered relief to others, he raised tariffs on Chinese goods even higher, up to 125%. And when you include earlier penalties related to Chinese fentanyl shipments, China's effective tariff rate rose to a staggering 145%. This was clearly a message. In Trump's view, China is the chief offender and would continue to feel the full brunt of U.S. trade pressure. For everyone else, it was a 90-day truce. As Trump's Treasury Secretary Scott Bessent later explained, do not retaliate, and you will be rewarded. In other words, countries that didn't hit back at the U.S. tariffs got a temporary reprieve, whereas China, which had announced its own big retaliatory tariffs, was singled out for punishment. So what pushed Trump to make this move now, practically overnight? Officially, the administration framed it as a strategic masterstroke. The pause, they said, would give other countries time to negotiate new trade deals with Washington. It was portrayed as an opening for respectful, balanced negotiations, a chance for partners to come to the table while the U.S. holds off on harsher measures. In fact, President Trump himself announced on social media, "I have authorized a 90-day pause," acknowledging the many countries that had refrained from retaliation and were in talks with the U.S. The implicit message was, let's talk now and fix these trade problems before tariffs kick back in. Trump's press secretary Caroline Leavitt insisted this was all part of a grand negotiating strategy, the art of the deal in action, so to speak. But to outside observers, it looked less like 4D chess and more like a panicked retreat. And there's good reason to think that. Just days earlier, Trump had unleashed the most sweeping tariffs in modern U.S. history. On April 2nd, a date he dubbed Liberation Day, he declared a national economic emergency and vowed to impose new reciprocal tariffs on almost every country on Earth. It was supposed to be a bold strike to reduce America's trade deficits. The first salvo was a flat 10% import tax on most countries, which hit on April 5th. Then, just after midnight on April 9th, the administration went further, slapping extra tariffs on countries it accused of unfair trade practices. Tailored rates meant to reciprocate what those nations allegedly do to the U.S. This rapid escalation truly upended the world trading system. The global reaction was swift and ugly. In the span of a few days, financial markets went into a tailspin. Investors worldwide started fearing that we were heading for a full-blown trade war and even a global recession. Stock markets plunged for 4 days straight following Trump's tariff announcement. By April 8th, the S&P 500 had lost well over 10% of its value in just a week, and trillions of dollars in market value had evaporated. It was such a rout that some pundits drew comparisons to 2008. Businesses were paralyzed with uncertainty. How could they plan investments or supply chains when the tariff regime was changing by the hour? Inside the White House, alarm bells were ringing from Trump's own economic advisors. This wasn't supposed to happen. Trump had often boasted that markets loved him, but now his tariff gambit was threatening to trigger a market crash on his watch. Facing a potential economic crisis largely of its own making, the administration scrambled. Pressure from Republican lawmakers and business leaders mounted by the day. Even some of Trump's staunch allies in industry began warning that the tariff strategy was going too far. According to reports, Republican senators and corporate executives privately pleaded with the White House to find an off-ramp before things got worse. By April 9th, it seems Trump reached his limit. The bond market, which Trump watches closely, was flashing warning signs as well, with Treasury yields getting a little queasy, as he later put it. All of this likely convinced Trump that a tactical retreat was necessary. As one Asia Society expert put it, other countries will welcome this 90-day stay of execution. But the whiplash of constant zigzags is exactly what allies and businesses hate. In short, Trump's sudden pause on tariffs was less a crafty chess move than a response to market panic and political blowback. The White House essentially had to hit the emergency brake to avoid driving the economy off a cliff. To be fair, Trump is trying to present it as a win-win. By pausing the tariffs now, he's giving America's trading partners a chance to come to the negotiating table under U.S. terms. The administration says more than 75 countries have already contacted them, hoping to strike new trade deals in this window. And indeed, many U.S. allies were immensely relieved at the pause. The European Union, for example, quickly suspended its own planned retaliatory tariffs after Trump's reversal, essentially saying, okay, let's hold fire for now. Countries like Japan, South Korea, and Canada, all initially in Trump's crosshairs, are now breathing easier, at least for the moment. They had braced for higher U.S. duties on their goods. Now they've been spared, pending talks. This is exactly what Trump wanted. Leverage to extract concessions. By showing he's willing to inflict pain, even if it also hurt the U.S., he believes other nations will be more eager to make a deal. On the other hand, China's response has been fury. Beijing was not included in the tariff truce, so it has little incentive to play nice. In fact, China had already retaliated against Trump's initial tariffs with an 84% tariff on U.S. goods effective April 10th. After Trump's escalation to 125% tariffs on Chinese imports, China blasted the move and vowed to fight to the end if the U.S. kept escalating. They've not only raised tariffs on U.S. exports, but also hinted at other weapons in their arsenal. For instance, restricting exports of rare earth minerals critical to U.S. industry. In other words, the trade war with China is still very much on, pause or no pause. In fact, a veteran U.S. political analyst, Larry Sabato, warned that the worst part is probably ahead because of China. He expects the U.S.-China trade conflict to intensify, potentially with grim consequences. So that's the immediate background. A frantic tariff rollout and an equally frantic pullback, done to calm the storms Trump himself stirred up. Now let's zoom out. How does this 90-day tariff pause fit into Trump's broader policy vision? And what are the chances it will succeed in reshaping trade to America's advantage? To answer that, we need to understand Trump's overall approach to economic and foreign policy, especially on trade, and compare it with what he did back in his first term. First off, this move actually aligns quite closely with Trump's long-standing trade philosophy. Trump has always seen trade as a zero-sum game. For decades, he's complained that other countries have been ripping off the United States. In his view, large U.S. trade deficits, buying more from countries like China or Germany than we sell to them, are a sign of America being cheated. His solution has been something of a 1950s throwback. Protective tariffs, essentially taxes on imports, to level the playing field. During what he called America's past golden age, tariffs were high and U.S. factories thrived, and he genuinely believes restoring those high tariff walls will bring back American manufacturing jobs. In fact, one Brookings Institution expert noted that Trump seems to want to rewind the clock to an era when 1/3 of American workers were in factories, versus about 8% today. So the idea of imposing sweeping tariffs on all countries, as extreme as it is, fits that worldview. Trump sees tariffs as leverage, a stick to make other countries lower their barriers and buy more American goods, and as a shield to encourage companies to make products in the USA. The April 2nd Liberation Day announcement was the purest expression of that. He literally declared a national emergency over trade deficits and vowed to raise tariffs until those deficits shrink. The 10% universal tariff he set was unprecedented in modern times. But to Trump, it was about fairness. If other countries charge higher tariffs or have VAT taxes, the U.S. will match them, hence reciprocal tariffs. So philosophically, The goal of the tariff regime is absolutely in line with Trump's America First agenda. He's willing to upset decades of U.S. free trade policy if it means protecting domestic industries and forcing trading partners to play ball on his terms. The tactics we're seeing now, threaten, escalate, then pause and negotiate, also have clear precedents in Trump's first term. Remember, this is a president who prides himself on being a tough negotiator. During his earlier time in office, he frequently used the threat of tariffs as a bargaining chip. For example, in 2018, he slapped steep tariffs on steel and aluminum imports worldwide, citing national security. That angered allies, Canada, Europe, etc., but it brought them to the negotiating table. He then used those tariffs as leverage to renegotiate NAFTA with Canada and Mexico, resulting in the USMCA trade deal in 2020. Similarly, he threatened to put tariffs on European cars to push the EU toward a trade discussion in 2018. He didn't ultimately impose the auto tariffs at that time. Instead, after a meeting with the EU Commission president, both sides declared a truce and talked about moving towards zero tariffs in certain sectors. Those talks didn't yield a big deal, but the threat was key in forcing engagement. And let's not forget South Korea. Trump pushed to renegotiate the U.S.-Korea Free Trade Agreement and succeeded in getting minor tweaks by implicitly wielding tariff threats. South Korea also agreed to limit its steel exports to avoid tariffs. One of Trump's most dramatic tariff gambits in his first term was with Mexico in 2019. Though in that case, it was about immigration, not traditional trade issues. He threatened Mexico with escalating tariffs unless they helped stem the flow of migrants. In the end, Mexico hurriedly agreed to deploy its National Guard to slow migration, and Trump suspended the tariffs indefinitely. Sound familiar? The pattern was, threaten extreme tariffs, then suspend them when the other side ostensibly gave concessions. That's basically what we're seeing now writ large with many countries at once. And of course, there was the big one. The U.S.-China trade war of 2018 to 2019. Trump systematically raised tariffs on hundreds of billions of dollars of Chinese goods, and China retaliated in kind. It was tit-for-tat economic warfare. Eventually, by late 2019, both sides were feeling the pain, and they negotiated the Phase 1 trade deal in early 2020. In that deal, China agreed to buy more U.S. products, like farm goods, and Trump paused further tariff increases. But importantly, most of the tariffs stayed in place. Trump touted that as a win, though many issues were left unresolved. Now, in 2025, it appears he's again ramping up pressure on China with that 125% tariff to try to force a deeper agreement, perhaps a Phase 2 or some new concessions. So, in a broad sense, this 90-day tariff suspension can be seen as Trump returning to his playbook. He's creating chaos and uncertainty as a negotiating tactic, then offering a chance for a deal under U.S. terms. Will it work? That's the trillion-dollar question. There are a few scenarios to consider. Optimistically, Trump's approach could yield some results. Some countries might blink, facing the prospect that tariffs could snap back to punitive levels in 90 days. U.S. allies and partners might decide it's better to give Trump at least part of what he wants. That could mean, for instance, agreeing to voluntary quotas on exports, so they ship less to the U.S. to reduce the trade imbalance, or maybe cutting their own tariffs on American products. It might mean countries like Japan and the UK, which have each wanted trade deals with the U.S., accelerate negotiations to placate Trump. In fact, the White House's claim that dozens of nations' phones have been ringing off the hook to make deals suggests that some talks are already underway. Trump can point to that and say, "See, my tough stance is bringing folks to the table." For example, the European Union might offer to buy more American energy or agriculture, or to join some U.S. initiative to pressure China on trade practices, as a way of persuading Trump to permanently exempt Europe from these tariffs. Japan could potentially agree to further open its market to U.S. auto exports or farm goods beyond what it did in a 2019 mini-deal. South Korea might be asked to increase its imports of American cars or machinery. Many countries could decide that a few concessions are a small price to pay to avoid a trade war with their biggest trading partner, the U.S. Trump has explicitly invited bilateral negotiations. He wants deals country by country, so we may see a flurry of trade talks in the coming weeks. If some agreements, even modest ones, emerge by the end of the 90 days, Trump will undoubtedly claim victory and justify his approach. However, many experts are skeptical that meaningful deals can be struck in such a short time. Realistically, 90 days is a very short window to resolve trade disputes that often stretch on for years. Negotiating even a limited trade agreement can be complex. It took more than a year to renegotiate NAFTA, for instance, and that was among close allies. Now we're talking about potentially negotiating with dozens of countries at once under an arbitrary deadline. That's a tall order. Plus, Trump's mercurial style itself can hinder deal-making. Other governments might hesitate to sign anything significant if they fear Trump could change his mind or demand more later. As one analysis noted, the on-again, off-again tariff decisions add to a sense of whiplash and could erode faith in U.S. offers. In other words, why make concessions to the Trump administration if you suspect that even a deal won't guarantee stability? Today, the tariffs are paused. Tomorrow, they could be back. That uncertainty might lead some countries to hold off and just hope that domestic U.S. pressure will force Trump to extend the pause or back down further. We also have to consider how key players are responding. We already discussed China. They're in a tit-for-tat fight now. It's hard to imagine a comprehensive U.S.-China trade agreement in the next 90 days, given how far apart the two sides are, and with relations strained over other issues too. If anything, the U.S.-China standoff could escalate, which might undercut any positive effects of the 90-day truce with others. If the global economy sees the U.S. and China trading ever higher blows, 125% tariffs, export bans, etc., it could dampen investment and growth worldwide. What about U.S. allies? Europe seems content that Trump paused the tariffs. EU officials welcomed the de-escalation. But the Europeans also made it clear they found the whole episode deeply unsettling. They don't like being lumped in with truly unfair traders. Europe sees itself as a partner to the US, not an adversary, and there's some resentment that Trump went after them at all. European diplomats might negotiate, but they'll also be thinking long-term about how to reduce their vulnerability to such US volatility, perhaps by diversifying trade or strengthening EU trade enforcement autonomously. Japan and South Korea, as close security allies of the US, will likely try to keep their heads down and make small concessions quietly if needed. They were already caught off guard by being hit with across-the-board tariffs when Trump first rolled them out. Now they've been given a reprieve. I suspect Tokyo and Seoul will use these 90 days to lobby Washington intensely behind the scenes, emphasizing the alliance and maybe offering incremental market openings to get exempted from any future tariff snapback. Mexico and Canada might also push to ensure that the new USMCA trade deal stays on track and that they remain exempt from any future U.S. tariffs. They were worried the reciprocal tariffs might hit them, but thus far, North America seems to have avoided the worst, aside from existing metal tariffs. In essence, Trump's tariff pause is putting U.S. credibility to the test. Can Washington convince partners to sign deals under a threat, or will partners just play for time? Some countries might conclude that Trump is bluffing. Since he reversed himself once due to market panic, maybe he won't dare reimpose those tariffs in July if markets rebel again. It's a bit of a game of chicken. If other countries think the U.S. will self-sabotage by reinstating tariffs and thus tank the stock market in 90 days, they might choose to wait it out rather than give concessions now. They might hope that Congress or U.S. businesses will pressure Trump to extend the pause or moderate his demands. Now let's talk about something a bit less tangible but very important: America's global trust and soft power. Trump's trade policy zigzags don't just affect stock charts. They also impact how the United States is perceived as a partner and leader. Soft power is the ability of a country to influence others through attraction and credibility rather than coercion. One could argue that the U.S.'s economic leadership and consistency in the post-war era has been a cornerstone of its soft power. Allies trusted that the U.S. would abide by international rules and its own commitments, even if there were occasional disputes. With Trump's approach, that perception has taken some hits. Think about it. In the span of a week, the U.S. went from saying, "We're taxing everyone because we think you're cheating us," to, "Okay, not everyone, let's pause. But maybe in 90 days we tax you again." For governments around the world, especially allies, that's deeply unsettling. One day you're a friend. The next day you're labeled a trade villain subject to tariffs. Then you're a friend again, but only for 3 months. These kinds of repeated policy shifts make it hard for even America's closest allies to trust Washington's word. As Daniel Russell from the Asia Society observed, the constant zigzags create exactly the uncertainty that businesses and governments hate. Allies have been rattled by the blunt force tactics and see the sudden reversal not as a new cooperative spirit, but as damage control after things went wrong. That's a telling phrase, damage control. It implies allies think the U.S. is acting unpredictably and cleaning up messes of its own making. This inevitably erodes U.S. credibility. Consider some of America's friends in Asia and Europe. South Korea and Japan aligned with the U.S. on tough stances toward China, expecting a united front. Then suddenly they themselves were slapped with U.S. tariffs as part of Trump's all-country approach. That kind of surprise can make even an ally wonder, is the U.S. reliable? Similarly, European officials have openly said that while they share U.S. concerns about China's trade practices, they don't approve of being hit with U.S. tariffs or being strong-armed. They had negotiated in good faith with previous U.S. administrations for trade agreements like the Transatlantic Trade and Investment Partnership, which was shelved when Trump took office. Then they saw Trump yank the U.S. out of the Trans-Pacific Partnership (TPP) trade deal in 2017, leaving allies in the lurch. Now this tariff saga, it all compounds a sense that U.S. trade policy can swing wildly with administrations. The result is that some allies might start hedging. For example, after Trump withdrew from TPP, the remaining 11 countries, including Japan, Canada, Australia, went ahead and formed their own pact, the CPTPP, without the U.S. They decided they couldn't depend on U.S. leadership for multilateral trade rules at that time. Likewise, Europe, after the Trump-era setbacks, negotiated its own trade agreements with partners like Japan and Mercosur. In the realm of soft power, those are signals of the U.S. losing influence. Others are moving on or making backup plans. Now, with Trump back and these erratic tariff maneuvers, the question of U.S. reliability looms large. If you're an ally, you might ask, even if we sign a deal with this administration, will it hold? Or will there be a tweet at 3 a.m. that changes everything? This uncertainty can diminish America's ability to rally allies on broader issues. For instance, how can European leaders fully coordinate with the U.S. on challenging China or Russia if they fear being economically sucker-punched by a sudden tariff? It introduces a layer of mistrust in the relationships. We also have to consider the perspective of nations that aren't necessarily U.S. allies, emerging economies, or others who watch these moves. The image of the U.S. may shift from the stable anchor of the global economy to a more self-interested, unpredictable actor. Traditionally, U.S. leadership in global trade, through institutions like the WTO, etc., was a pillar of its soft power. Under Trump, the U.S. has been more willing to break those norms, for example, by using a national security law, IEEPA, to impose tariffs outside of WTO rules. That might yield short-term leverage, but it also undermines the rules-based order that the U.S. itself built. Other countries notice this. Some might even exploit it. For example, China can position itself, however disingenuously, as a defender of multilateral trade at the WTO simply by contrasting itself with Trump's America First tactics. Over time, if not checked, that could weaken U.S. soft power and strengthen competitors' narratives that the U.S. can't be counted on to lead fairly. A striking commentary came from Larry Sabato, a respected American political scientist, who said after the tariff flip-flop, "He has scrambled everything and America is no longer trusted in any sphere now. Defense, international relations, economics. It's sad." That's obviously a dramatic statement, but it captures the concern that these kinds of moves bleed into the wider trust in American commitments. Whether it's a security pact or a trade promise, it's probably an exaggeration to say no longer trusted in any sphere. Many allies still rely on U.S. security guarantees, for example. But the fact Sabato lumps defense and economics together points to a broader soft power issue. Allies link them. If you can't trust the U.S. on trade, it may sow doubt in other areas too, or at least create friction. We saw something similar in 2017 when Trump's wavering on NATO funding rattled European allies' faith, even though NATO held firm. In summary, America's credibility has taken a hit from the tariff saga. Repeated shifts in the perception of policy made on impulse create an image of unreliability. The 90-day pause is welcomed, but it's like a temporary patch on a larger issue of confidence. If Trump wants the U.S. to be trusted again, it would likely require more consistency and consultation with partners. Otherwise, even U.S. allies might start keeping a bit of distance, and U.S. soft power will diminish. As one Asia expert observed, the real cost of such uncertainty is that it creates more of the uncertainty that businesses and governments hate. Allies hate uncertainty because it makes it hard to align with the U.S. The world, in a sense, is getting used to bracing for impact with each new Trump trade decision. That's not a good foundation for global leadership. Now that we've looked at the context and the trust issues, What are experts and analysts saying about all this? And where might things go from here? Not surprisingly, opinions run the gamut. Some see Trump's 90-day pause as a shrewd tactical retreat that could yield long-term wins, while others see it as a chaotic misstep that might repeat itself. On the optimistic side, members of Trump's team and supporters are portraying the tariff pause as part of a grand strategy. Treasury Secretary Scott Bessent, who seems to have been a key voice urging moderation, came out and told reporters that Trump had created maximum negotiating leverage for himself, and that this was the plan all along. In other words, they argue that Trump hasn't really caved. Rather, he showed the world he was willing to go to extremes, and that shock was necessary to get everyone's attention. Now that he has it, he can extract concessions. It's the art of the deal framing. Start with an outrageous position, then compromise to something more reasonable and claim victory. Stephen Miller, one of Trump's hardline advisors, even bragged on social media that we've been watching the greatest economic master strategy from an American president in history. That's typical Miller hyperbole, of course. The White House also claimed, as mentioned, that dozens of countries were rushing to negotiate. Press Secretary Leavitt said the phones have been ringing off the hook, with countries eager to address trade issues during the pause. If true, that suggests Trump's shock and pause tactic is forcing engagement that previous polite requests did not. Furthermore, some conservative economists and think tank fellows applaud Trump's toughness. They argue that for far too long the U.S. let trading partners impose higher tariffs or engage in unfair practices, and finally someone is hitting back. For instance, the Heritage Foundation's E.J. Antoni wrote in early 2025 that Trump understands other nations have exploited the U.S. for decades, and it's long past time America fought back, insisting that Trump's actions will benefit Americans greatly in the long run. This camp also tends to believe that tariffs don't necessarily hurt U.S. consumers as much as critics claim. They point to factors like currency adjustments or overseas producers absorbing costs. Their view is that the U.S. has nothing to fear from a tariff confrontation because America's economy is fundamentally strong and other countries depend on access to the U.S. market more than the U.S. depends on theirs. In their eyes, a 90-day pause is just a clever way to separate the good guys from the bad guys, reward the allies willing to negotiate, and keep the pressure on the truly bad actor, China. Some business voices also reacted positively, if cautiously, to the pause. For example, upon the news, markets surged and some investors called it the pivotal moment we've been waiting for. The thinking there is that perhaps this marks a turning point where Trump will seek negotiated outcomes instead of all-out trade war. A sign of rationality returning, which is what investors hoped for. If the 90-day talks go well, we might see permanent exemptions or lower tariffs for allies, which would let global trade resume more normally. While the U.S. focuses on China, that scenario would validate Trump's brinkmanship. He'd say, look, everyone capitulated to my demands to some extent, and the U.S. got a better deal. However, many analysts are deeply skeptical of this rosy take. They note that even with the pause, Trump hasn't articulated a clear long-term plan. Investors might have been relieved by the pause, but as Reuters reported, they still say uncertainty about the longer-term plan for tariffs persisted. The fundamental worry is that nobody really knows if Trump will double down again in 90 days or find another target. One former White House official, Mark Short, commented that while he was relieved by the reprieve, "I'm not sure that anybody in the White House looks like a victor right now. It appears as if they're in retreat." That captures a common view outside the Trump inner circle. This was a forced climb down, not a cunning victory. Economists point out that the damage from the initial tariff spree isn't easily undone. Yes, stocks rebounded on April 9th, but not to levels from before Trump's Liberation Day announcement. The market is still below where it was a week prior, and businesses have already had to make snap decisions in response to the chaos. There were reports that some companies paused hiring or investment plans due to the tariff uncertainty. For example, an automaker cut jobs and a steel company laid off 1,200 workers when the tariffs were first imposed, illustrating that these policy swings have real costs. If those tariffs might come back in 90 days, that cloud of uncertainty remains. From a strategic standpoint, critics argue that Trump's approach is undermining U.S. interests more than advancing them. Lawrence Summers, a former U.S. Treasury Secretary, issued a stark warning. "We may be headed for a serious financial crisis wholly induced by U.S. government tariff policy." That is a strong statement. Summers basically fears that if Trump keeps this unpredictable, heavy-handed tariff routine up, he could crash the financial system. His rationale is that markets can only take so much volatility and uncertainty emanating from government action. Indeed, the bond market showed stress when everyone was dumping treasuries during the height of the panic, which is the opposite of what usually happens in crises. Normally, people buy U.S. bonds as a safe haven. This time, some sold because the U.S. itself was seen as introducing risk. That's a worrisome sign. Trade experts also note that tariffs are a very blunt instrument to bring back manufacturing jobs or reduce deficits. Even before this 90-day pause, analysis showed that previous tariff hikes, like in 2018 to 2019, didn't magically revive factories. U.S. manufacturing as a share of employment continued to decline due to automation and other factors. The Council on Foreign Relations and others have pointed out that trade deficits are influenced by macroeconomics, savings and investment rates, more than tariffs. So Trump might be fighting a symptom, the deficit, with tariffs without addressing underlying causes. By that logic, even if he forces some changes, the effect on jobs might be minor. A Brookings expert, Bill Galston, called Trump's belief that tariffs will restore mid-20th century manufacturing employment a fantasy, noting that we're at 8% manufacturing employment and not going back to 30% plus because the world and technology have changed. Another concern is that 90 days might not be enough to secure lasting concessions, and if Trump doesn't get what he wants, we could be right back to crisis. Sabato's pessimistic take we cited earlier highlights that worry. It's not over at all, he said, implying more trouble is likely ahead due to China. If July comes and, say, Europe hasn't agreed to some big soybean purchase or tariff alignment that Trump can tout, will he really slap tariffs back on and risk another market meltdown? If yes, that's more economic pain. If no, then his threat was a bluff. Observers like Sabato effectively think Trump has scrambled everything without a clear endgame, leaving America's reputation damaged and the tough issues like China's state subsidies or WTO reform still unresolved. There are also voices urging a different approach entirely. Focus on domestic innovation and competitiveness instead of tariffs. A commentary from CSIS, Center for Strategic and International Studies, noted that this 90-day pause is a chance for U.S. policymakers to remember the real source of U.S. economic strength, innovation, and that relying on tariffs to revive jobs is misguided. In other words, rather than swinging between tariff wars and truces, the U.S. could tackle its trade concerns by investing in technology, skills, and alliances that set rules. For example, working with allies to pressure China at the WTO on intellectual property issues, something more targeted and cooperative. Even within Trump's team, there's a split that influences the strategic outlook. We have tariff hawks like Peter Navarro, who cheer on aggressive tariffs, and more moderate voices like Scott Bessent, Treasury Secretary, who reportedly pushed for lower tariffs and more certainty for markets. It seems Bessent's influence grew during this crisis. He was described as the adult in the room, guiding Trump toward the pause. Stephen Moore, a heritage economist close to Trump, remarked that Bessent was trying to counter the hardcore protectionists internally. This internal dynamic will matter going forward. If Bessent and the moderates keep sway, perhaps the administration will quietly seek deals and avoid re-escalation in 90 days. If Navarro and the hawks regain favor, we could see a return to go big on tariffs. That uncertainty is, again, something that makes predicting the outcome difficult. What about Congress and the political context? By mid-April 2025, some congressional Republicans have started voicing discomfort with the wild swings in trade policy, though many still publicly support Trump's goals of fairer trade. If the tariff chaos threatens the economy, you might see more GOP lawmakers break ranks and push legislation to limit Trump's tariff powers. For instance, reforming the very law, IEPA, he's using to justify these emergency tariffs. On the Democratic side, there's a mix of reactions. Some Democrats actually agree with being tough on trade, especially on China, and with policies that protect Midwestern manufacturing. But they generally criticize the haphazard execution of Trump's policy. This could become a bipartisan concern if economic volatility continues. That political pressure is another reason some experts think Trump might not follow through with reimposing tariffs after 90 days. Doing so would be right around summer 2025. And if it tanked the economy, it could hurt Republicans going into the next election cycle. In this sense, the 90-day pause might quietly become a 180-day pause or longer, as Trump tries to avoid self-inflicted wounds while claiming he's holding out for deals. Looking at respected outlets, the Wall Street Journal's editorial page, known for free market stances, has likely been critical of Trump's tariff maneuvers, calling them counterproductive. The Financial Times and others have probably echoed that Trump's approach undermines global stability and could backfire on the U.S. economy. On the other hand, publications from conservative think tanks might praise Trump for finally confronting issues like China's mercantilism or Europe's farm subsidies, etc., albeit perhaps wishing for a more coordinated approach. In sum, expert opinion is split, but there's a lean toward skepticism outside of Trump's loyalists. Yes, the tariff pause prevented an immediate meltdown. That's good. But long-term success is far from assured. Optimists see it as Trump leveraging U.S. economic might to rewrite unfair trade deals in America's favor. Pessimists see it as a chaotic experiment that could damage America's economic health and alliances for questionable gains. As one analyst quipped, Trump seems to want a victory by chaos. He believes he can bludgeon others into submission. The next few months will test whether that theory holds water. So, what are the key takeaways, and where do we go from here? To wrap up, Trump's 90-day suspension of most tariffs is a dramatic pause in an even more dramatic trade saga. It was prompted by turmoil and is aimed at recalibrating his strategy. In the immediate term, it has provided relief. Markets bounced back strongly, and U.S. trading partners have taken a step back from the brink of an all-out trade war. The move reflects Trump's broader approach of using maximal pressure to try to extract concessions, which we saw in his first term and now see again. However, it also underscores the risks of that approach: unpredictability, global anxiety, and a hit to U.S. credibility. Over the next 3 months, we will see intense negotiations. Perhaps some mini deals will emerge. Maybe a few countries will announce new purchase agreements for American products or tweaks to tariffs to please Washington. Those would give Trump political ammo to say his hardball tactics are working. On the other hand, if key players stall or talks drag on, Trump will face a tough choice in July: escalate or extend. Escalating, i.e., reimposing or even increasing tariffs, would risk plunging the economy right back into chaos, something he may want to avoid as the 2026 midterm elections approach. Extending the pause, or quietly making it permanent for allies, might avert immediate pain, but could be seen as backing down if no tangible gains are obtained. It's a delicate balancing act. Globally, this episode could reshape economic dynamics. If Trump's gamble leads to new trade alignments, say a united front of the U.S., and allies pressuring China, that could significantly influence global trade flows and perhaps even strengthen rules against things like intellectual property theft, if they negotiate such issues. Conversely, if the U.S. keeps appearing erratic, other countries might deepen ties with each other and with powers like the EU or even China to hedge against U.S. uncertainty. One thing is clear: U.S. influence is on the line. Will America be seen as a deal-maker that can use its weight to get better outcomes, or as a disruptor that other nations must work around? The outcome of this 90-day truce will contribute to that verdict. If constructive deals follow, Trump can argue that America's word carries weight, that his threats are credible and hence U.S. demands must be taken seriously. If it ends in disarray, it could reinforce a narrative of U.S. unpredictability, weakening Washington's hand in everything from trade talks to diplomatic alliances. As we've discussed, allies are watching and judging. Some quietly hopeful this will lead to a more balanced trade relationship, others quietly developing Plan Bs in case it doesn't. In conclusion, the April 9th tariff pause is both a relief and a reality check. It's a relief from an escalating trade war that was veering out of control. But it's also a reality check that signals how fragile the situation still is. The global economy dodged a bullet this week, but that gun hasn't been holstered yet. The coming months will reveal whether Trump's high-stakes tactics can actually deliver a new equilibrium in America's favor, or whether we're simply in the eye of the storm, with another gale of tariff conflicts on the horizon. One veteran diplomat aptly summed up the sentiment: other countries will welcome the 90-day stay of execution, if it lasts. But the whiplash from constant zigzags creates uncertainty that governments hate. Everyone from Beijing to Brussels to Wall Street will be on edge through these 90 days. By July, we'll likely know if this pause was the first step toward renewed stability in U.S. global economic leadership, or just a brief timeout before trade tensions come roaring back. The stakes are sky high, nothing less than the trajectory of the global trading system and America's role in it. For now, the world can only watch and wait as the clock ticks on Trump's tariff timeout, hoping that cooler heads prevail and that this gamble pays off without further shaking the foundation of the world economy.